welcome to Sectors Up Close. I'm Angeline Ong. Our sector today is electric vehicles and our guest is Patrick Healy of Caliber Financial Partners. Tesla's stock market rally is well publicised, but the industry makes up not only car makers but chip makers and telecommunications companies, among a long list of tech firms that form part of this sector. The stock's Global Electric Vehicle Index is one of only a handful of indexes that track the sector and includes big players such as Tesla, China's BYD and South Korea's Kia Motors as its top holdings. It's up 36% over the past year. While this index, the S&P Kensho EV Index, is up over 200%. But despite these gains, there are many challenges facing a sector that has low penetration and a heavy reliance on subsidies. So, should investors be putting their money into the sector? For more on this, I'm now joined by Patrick Healy, the president of Caliber Financial Partners. How much of the recent gains are policy-driven? Can policy shift consumer behavior?
Yeah, there's definitely a lot of investor enthusiasm and sentiment towards where the puck is going, so to speak. And certainly with the new administration coming in and their commitment and desire towards a greener economy, a lot of investors and some speculators are front-running that initiative. There will be a lot of money spent on green infrastructure that supports the electric vehicle market and all of the tangent markets accordingly. But I think there's a lot of enthusiasm. I think you need to be invested in the space because that's where the puck is going, as I said. And I think you certainly want to spread your bets around and not be too concentrated in any one name.
Patrick, valuations are now quite advanced, though. Is this froth justified given low levels of sales, a lack of infrastructure and reliance on government subsidies?
Yeah, whether it's justified or not, that's what makes the market. But we're in a very accommodative monetary policy environment, zero interest rates, and the Fed has committed to keeping them very low for the next several years. So that gives investors a lot of confidence that they don't have rates creeping up on them in the short term. So that's a runway to invest. And clearly that the move towards a greener economy has a lot of legs. It's not a speculative trade. Valuations may be getting a little ahead of ourselves, but it will be up to the management of the companies to deliver on the revenue projections that they've stated in their communications.
So if you wanted to position yourself in this sector, how would you get in? Which subsectors would you look into? Is it raw materials? Is it the technology?
Yeah, I'm certainly invested in electric vehicle companies, startups, as well as more mature companies. Battery technology, I think, is still a little bit further out on the horizon, and you've seen some real froth in some of those names. I think ultimately it will be a game changer for the industry, but we may be 4 or 5 years out on some of that battery technology.
And finally, Patrick, would you buy, hold, or sell on this sector?
I'm long, and I'm a long-term investor, so I am committed to holding my position through volatility, and you're going to experience that. Just a word of warning as an investor, if you're inexperienced, you probably want to get exposure through an ETF or a handful of ETFs, just because you have the manager that can make those decisions for you and check emotions at the door. But I am very bullish on the sector long-term. I'm not trying to get too caught up in the short-term volatility because I'm expecting that to take place.
Thank you very much. That was Patrick Healy of Caliber Financial Partners. Before I go, here are some of the top stories in the sector. US President Joe Biden has vowed to replace the US government's fleet of 650,000 vehicles with electric models as part of a policy shift towards clean energy. Biden made the comments in a speech on Monday, in which he also pledged to only buy EVs that were made in America. As of July 2020, the US government owned only 3,215 electric vehicles. It would cost $20 billion or more to replace the entire fleet. Oil major Royal Dutch Shell announced it is buying the owner of Britain's biggest EV charging network, Ubitricity. The deal to acquire 2,700 on-street charge points will be completed by the end of the year and as part of Shell's aim to become net zero emissions by 2050 or sooner. And finally, US charging network EVgo Services has agreed to go public through a merger with a special purpose acquisition company named Climate Change Crisis Real Impact in a deal that values EVgo at $2.6 billion. This so-called SPAC deal is the latest in the EV space, which has seen Nikola and Fisker go public through this route. And that is your roundup of the electric vehicle sector. I'm Angeline Ong, and this is Reuters.